Good morning, everyone. This is Christy Johnson with Premier Marketing, and today we are talking about Lincoln Moneyguard on our Live, Quit, or Die hybrid series. We are rediscovering Lincoln Moneyguard here at Premier Marketing, and I've really discovered some very nice features that it has. And I really hope you enjoy the webinar. Rob Johnson with Lincoln Moneyguard, he's the Regional Marketing Director, and he has vast knowledge about this product and about the industry itself. So with that, I turn it over to Rob.
Hey, thank you, Christy. Good morning, everyone. Thank you for taking time out of your schedule, and I appreciate that. I commit to you to keep this under 30 minutes because I know you all have things to do today, so I appreciate your time. This is an exciting time for Lincoln. This last month, we celebrated 30 years in this long-term care space. So we're beginning our 31st year in this, what we'll talk about today. We'll talk about the different types of long-term care, but in the hybrid long-term care space, we've been that leader for the last 30 years. In fact, there's roughly 7 or 8 other carriers in this market right now. Of those carriers, we wrote 60% of all the lives last year. So really have been a leader for a long time, and as our product has continued to evolve over the years, our current iteration, Moneyguard 2, we made some changes last year and have provided a little more flexibility. So those of you who may not have looked at Lincoln in a while, maybe you'll see a few more options today that you might consider for your clients. So let's get started. We're going to just touch briefly on the challenge that long-term care or extended care can present, some of the options for planning out there right now. Then we'll dive a little deeper into the flexibility of Moneyguard. For those of you that may have looked at us in the past, you've typically thought us as a dump-in or single premium leverage play. We offer a little more flexibility than we have in the past in terms of funding options, and we'll go into some examples of that, and then we'll look at specific examples of some prospective clients that fit those needs. So the first thing I want to just touch briefly on is the challenge. When we think about long-term care, and for those of you that are maybe new to this space, that are wanting to get in, or maybe that have had a personal experience with a family member or friend, more often than not, when we hear the words of long-term care, most will immediately think nursing home. And the reality is, certainly there are a number of people that need nursing home. The reality is, when we look at where our claims are paid over the last 30 years, only 26% of claims are actually paid for individuals in a nursing home. Now, this has evolved as assisted livings have become more prominent. This last year, we were at about 24% of our claims were for assisted living. And for the math majors out there, that leaves 50% of our claims are actually paid for in-home care. And that's, if you talk to just about anyone, if they would prefer to stay at home as long as possible and provide that, have care brought to them, these policies and the traditional ones, the hybrid policies, all of the key players in the space will pay for home care. So it's important that when we're talking or having this discussion with their clients, that we make sure they understand that home care and assisted living are where most of the claims are being paid out. So, and again, these stats, you'll see stats all over the place. These are from 2016. The national average for a private nursing home room in the U.S. is $102,000 per year. If we were looking at home care, about $22 an hour. The national average for a private one-bedroom assisted living is about $4,500 per month. And now, obviously, these vary. You can, if you want to find the specific costs in your area, you can go to whatcarecosts.com/Lincoln. That will allow you to kind of dial in, find out what the care costs for nursing home, assisted living, home care across the country or in specific metro areas. So again, whatcarecosts.com/Lincoln. So there's the cost. What are the options out there? Obviously, there's the Medicare option. For those of you familiar with that, that's typically going to pay 100% for those first 21 days, and then there's a copay of $167 per day this year, days 21 through 100. So really not an option if we're talking about long-term care. Medicaid, obviously for those that have a limited means, and that's their plan design. I mean, there's certainly an option, but most their desire is not to depend on the government or Medicaid to provide for long-term care. Certainly, family is an option. The statistic here is that according to one survey, just 3 in 10 Americans age 40 or older feel that they're prepared to take on the job of a caregiver, of a family or friend in the next 5 years. I've seen another statistics that says the female caregiver is twice as likely to suffer from depression or anxiety having taken on the role of a caregiver. For a long time, even before Lincoln jumped in this space 30 years ago, there's been traditional long-term care options, and there's a time and a place for traditional long-term care. There's pros and cons. We used to have about 110 carriers offering us some type of traditional long-term care insurance. Today, that number stands at 11. So we've certainly seen that space shrink. The carriers that are left in there are well-known names. And like I said, there's a time and a place for those. And certainly that's something that my friends at Premier can assist you with if you want an illustration on that. Our focus today is on that hybrid, or you might have heard it called an asset-based LTC space. In essence, it gives you benefits if you never need care as long as your plan premiums are being paid. So whether you needed care and you had tax-free LTC benefits paid out more than you paid in, or a death benefit of more than you paid in. So it's really not a use it or lose it proposition for your client. They know they're going to get tax-free benefits one way or the other with a hybrid type plan. So why have people shied away from traditional long-term care? Typically, traditional long-term care is really a use it or lose it proposition. You've paid your premiums. If you pay for the next 30 years and you pass away, unless you've elected to have a return of premium right on there, it's truly a use it or lose it. It's like an auto insurance premium. There's possible premium increases for those of you that are new to this space. There have been rate increases from just every single carrier, and those you'll see those range from 10 to 100% in terms of where the carriers have requested rate increases. There's waiting or elimination periods. Typically, those are 60 or 90 days. The most common elimination period in the traditional space is a 90-day elimination period, which meaning after you paid for 20 years and you're 83 and you go on claim, you're still on the hook for the first 90 days. Some have said, the con is it's expensive, knowing that, hey, if I never need this, I'm not going to get anything back, or I can self-insure. So we believe that MoneyGuard is a smarter alternative to self-insuring. For those who've thought about self-insuring, hey, I see the cost, Rob, you've shown me. It says $100,000 a year or $4,500 a month for home care or for assisted living. We could self-insure that. Here's why we believe it's a smarter alternative. One, it provides tax advantage reimbursements for qualified long-term care expenses. So not just nursing home, assisted living, home care, hospice care, adult daycare. It's going to cover the gamut of long-term care settings. It offers benefits even if the clients never need long-term care. So like I said, there's The Lincoln Moneyguard plan is built on a universal life insurance chassis, of which the death benefit is guaranteed to be more than the premium you paid in. This number 3 is key. The premiums are set at issue. So what you see on the illustration, whether it's a single premium or an ongoing premium, are guaranteed not to change. And finally, this is what's going to separate Lincoln from the other carriers in this space, is that we have no elimination period. So if you qualify for benefits at, say, 82, and the cost of care is $12,000 a month, then you're eligible to be reimbursed up to $12,000 per month. If there's another carrier out there that has a similar plan, maybe it's a 60 or a 90-day elimination period, that means the first 24 or $36,000 would be out of your pocket. This is what is really key in our plan design with Lincoln. So let's look at some examples. If we think high level, what is Moneyguard? You can think of it as really 3 buckets, and this is the live, quit, or die. One, the biggest bucket is always going to be your long-term care benefit, your long-term care bucket that's going to provide tax-free reimbursement for qualified long-term care expenses. Typically, we're going to see this, there's going to be an amount of leverage, and I'll show you a PDF later. We're looking at 3, 4, 5, 6 times the amount of leverage of the dollars that you put into the plan. And depending on how you design it, there's also options for an inflation rider. So unlike a life insurance policy with an LTC rider where your long-term care expenses equal or will not be more than your death benefit, with a hybrid solution like Lincoln and the other carriers in this space, that long-term care benefit can continue to grow. And we offer options of a 3% or a 5% compound inflation. 3% is the most common. So that second bucket, this is the die bucket. You know, there's a benefit if they don't. So if they pass away and never need long-term care, there's a death benefit at least equal to what they paid in, if not more. And then the quit bucket. So this is the return of premium options. If we look at where the policies that we placed over the last 30 years, only about 2%, actually just under 2%, have actually surrendered their policy. But for those of you that are in this space that have presented long-term care, you know, inevitably you're going to be asked, what happens if I change my mind down the road? We offer 2 options. And these options rolled out about 5 years ago. So we offer an 80% option that says once you pay all your plan premiums, if you were to change your mind, you'd get back 80% of the plan premiums you paid in. The advantage to this option, and why it's by far the most popular, is it's going to provide the greatest leverage for your dollars. The second option says that if you change your mind, we'll return 100% of the premiums you paid after 5 years or after all the plan premiums have been made. Maybe you elected to do a 10-year payment period. So after 10 years, you could get the full 100% of the premium back if you changed your mind. You'll see an example later on. I'll show you the difference in the leverage. But again, we want there to be options for the clients so they have that peace of mind of, if something happened and we felt that we needed to surrender this policy, and they were that 1 or 2% of people that have Moneyguard that do that, there are options for them. So again, this just goes into that 80%, by far the most popular option that graded with the 100% return premium. I mentioned that it was after 5 years. Here's the schedule. You'll see year 1 it's 80%, year 2 84, so on. And so after 5 years, they could get 100% of their premium back. So when we think about Moneyguard, you can think about 4 different, you think about who your clients are, what type of clients. You have cash strong clients that are 60 plus that would have the ability to contribute 500 to 500,000 in premiums. They could do a single pay or a 2-pay, 3-pay. Those that are looking to just be done in 1, 2, 3 years and leverage those dollars. So if they put in $100,000, that immediately bought them $500,000 in long-term care benefits. And if they never needed long-term care, they had a death benefit of $140,000. So they knew that one way or the other, they were going to get tax-free benefits. Maybe you could think about your client base and you have those pre-retirees, those that are 50 to 65. Maybe their kids are just finishing up college or in college at that point, but could contribute an annual premium. Maybe they're not in a position yet to do it as a single premium or a 2-pay or a 3-pay, but could contribute over a number of years. Maybe they do a 5-pay, a 10-pay. With our plan now, we actually offer a 2 age 65 payment option. That's new as of last year. So when you think about that 50-year-old, this is an option that allows them to pay for the next 15 years, be done at 65, and know that that premium is guaranteed not to change. Maybe you're looking at retirees, just looking to reposition assets. You've had that conversation. If you had an extended care or long-term care event, what dollars would you use first? Maybe you've identified this chunk of money over here. This is what we would use first. If we could take that, leverage those dollars, and just reposition them and leverage those to provide long-term care benefits. And finally, thinking about those young professionals, maybe those high-income earners, doctors, attorneys, executives that may receive a bonus every year that could contribute $5,000, $10,000, $15,000 a year. They could elect to do at 2 age 65, and they could do a 10-pay, a 15-pay at that age. There's a lot of flexibility on how they could fund the plan, but each group of clients, demographics in your client base, there's a funding option for them. So let's look at an example. So Nancy, she's 60. What's unique about Lincoln is a couple things. Besides not having an elimination period, is we only have 2 rate classes. We have a couples rate for those that are married, and whether or not their spouse applies, they get the couples rate. For those that are single or widowed, they get the standard rate. We do not do table ratings. We do not differentiate between smokers and non-smokers. Couples rate and standards rate. The other thing that's different about Lincoln is that we do not order a paramed. We do not order APS. You'll have the application paperwork to fill out, and then there will be a phone interview. And that, as of July this year, we've moved to having a shorter, more customized phone interview. We've been averaging in that 10 to 20 minute range for those 60 and younger. If they're 61 and older, there's still the 15-minute cognitive screen which is standard in this space. So if we think about Nancy, she's 60, her spouse is uninsurable for long-term care. She qualifies for the couples rate, and she's elected to purchase a Lincoln Moneyguard policy. Her advisor has recommended it to her. At her age, she's seen her mother need long-term care down the road in the past, and so she's looking to do something to just reposition some assets. She had inherited some money that she's looking to leverage. So for her, if we look at a single premium option, again, this is that biggest bucket. She put in $100,000. That bought her $500,000 of long-term care benefits, and that equates to about $7,000 a month in benefits. And if you go back to thinking about what did Rob say the costs were? He said the costs were about $102,000 a year, but assisted living and home care were about $4,500. So what is this going to do? This is going to cover assisted living and home care. It's going to cover a big portion of that nursing home. It may not cover every dollar, but it will provide those tax-free LTC benefits. Now, for her at her age, since she's just 60, if she were to pass away without ever needing long-term care, there would be a tax-free benefit to her beneficiary of $167,000. And now if she were to change her mind 10 years down the road because she did a single premium, or 5 years down the road, or 2 years down the road, she could get back $80,000 over a $100,000 premium. So here's the other option. Maybe she's 60 and would prefer to kind of spread out the premium. So this is an example of Nancy electing to say, I want to fund this plan with $10,000 a year over the next 10 years. So you're going to see that bucket of money. You're going to see the 4 times leverage at $400,000, $406,000 of LTC benefits. Death benefits a little bit less, $135,000. That return of premium is still $80,000. So she has some options as a 60-year-old of how she wants to fund it. Maybe she would do $20,000 for 5 years. Maybe she does $10,000 for 5 years. That's up to her and her advisor on how they want to design the plan. Our only requirement is that there is at least a minimum of a $50,000 death benefit. I get that question all the time. What's the minimum premium? The minimum is only enough to provide at least a $50,000 death benefit. So let's look at a second example. This is when we're talking about payment flexibility. This is Victor and Gail. They're both applying. They qualify for the couples discount. They want to have a plan in place that allows them to have the policy fully funded by the time they retire, and also have that peace of mind that their premium will never increase. So they've elected to purchase a 15-pay with what they did at $16,000 in initial benefits. So if we look at that down, Victor, if he does an annual premium of $8,459 for the next 15 years, that bucket of money for him is $1.2 million. If he never needs long-term care, that minimum death benefit, and it's higher in those early years, is $144,000. And then that base premium, if he elects to change his mind, is $101,000. Similar thing for Gail. Her premiums are a little bit higher, $9,300 a year. We know from our statistics and from our claims experience that claims for females tend to last longer than males, and they're also likely to live longer. So you're going to see a premium for females be just slightly higher than males, obviously depending on the age. So again, this is looking at the greater flexibility for those younger ages. If you have that high income earner, that attorney, that doctor, physician, or executive at age 40. With our plan now, you have that option to have a plan in place that allows them to pay for the next 25 years for a 40-year-old. They can pay to age 65. So for Ryan, he elects to pay annual premiums of $6,360 a year. He takes a bonus or some additional money that he doesn't necessarily need for living expenses. He pays $6,360 a year for the next 25 years, or $530 a month. By the time he's age 84, he has a bucket of money of $3.3 million. And again, if we cut this in half, all of these numbers that you're seeing are linear. So we say, well, Rob, I'm not sure they could do $6,360 a month. If we did 2/3 of that, if we did $4,000 a month, that bucket of money would be about $2 million. So, and that monthly benefit in this case is just over $34,000. Again, death benefit $144,000, and then that returner premium of $127,000. All of these examples, again, just to show you the flexibility when we think about MoneyGuard. One of the examples that we didn't show here is with our plan compared to some of the others out there, is that we offer the ability to do anywhere between a 1-pay and a 10-pay. So they could do a 2-pay, 3-pay, 4-pay, 5-pay option. But you can also fund Lincoln MoneyGuard with cash value from a life insurance policy. So maybe you have that client that has $50,000 in an old whole life policy, doesn't need the life insurance anymore. That $50,000 is sitting there. Maybe they're paying $400 a month into that whole life policy that someone sold them 20 years ago. So they got that sitting there. They don't necessarily need the life insurance, but at their age, they're thinking, I'm 60, my parents need care now. How am I going to pay for that down the road? So with MoneyGuard, you have the flexibility to fund this plan with the 1035, and if they elect to make ongoing payments as well, maybe they 1035 to 50,000 over, and then continue to pay that premium that they pay in the whole life policy for the next 5 years, and then they're done. And they've leveraged those dollars for long-term care now instead of for life insurance, with that peace of mind that the policy is built on a life insurance chassis, so that they're going to get something back tax-free one way or the other, whether it's a death benefit or it's a long-term care benefit. We've been, and I get this all the time, well, I think of long-term care companies and you get to claim time. What is Lincoln doing? I mean, how long does it take to pay a long-term care claim? We are at a point right now where we're paying 97% of long-term care claims within 3 days. 3 days of when they're submitted. The other objection I sometimes get is, well, your reimbursement policy, my client needs to pay the premium, the bill first to the assisted living or to the home care. That's not necessarily the case. We could set up a direct bill with that home care agency, with that assisted living, with that nursing home, where that facility or home care agency bills Lincoln directly and we reimburse them. Obviously, the client would be responsible for any amount above their monthly benefit at that time, but we can set it up on that direct bill where we're paying that facility and the client's not needing to worry about collecting the bill, paying it, submitting it to the insurance carrier, and waiting for reimbursement. For those that do submit it to us, again, we're paying those within 97% of them within 3 days. Now, there's two things I want to show you as we look to wrap up here. Two pieces that Christy and my friends at Premier will have for you. The first one is, let me go to it right here, is our MoneyGuard leverage chart. So when you think about who your clients are, maybe individuals that could be good candidates for putting a plan into place. And again, I say long-term care, make sure you emphasize that it covers assisted living and home care, and it's just not for nursing home. But this leverage chart is a quick one-page piece to give you an idea of what leverage would be available at different ages. If we elected a 50-year-old female that did $100,000 single premium, you would see that individual would have a death benefit of $142,000. By the time they were age 80, they would have $1.1 million of long-term care benefits. And when I talked about the leverage being 3, 4, 5 times, at this age, for a 50-year-old, putting an inflation rider on there makes more sense. So for this individual, we're actually looking at over 10 times the leverage than what she put in. She put in $100,000. We have $1.1 million of long-term care benefits. That equates to a monthly benefit of $14,369. Again, same thing. You'll see it for the males. As you get to those older ages, for a 70-year-old or a 75-year-old, it typically makes more sense to just do a level benefit rather than one with an inflation rider. And again, there at a 70-year-old, you're going to see about 3.5 times the leverage. For a 65-year-old, about 5 times the leverage. So again, this is there to provide an income stream to help offset those costs of providing long-term care. And again, it's they are choosing where they want to receive that care, whether it's home care, nursing home, assisted living. These are dollars that will be paid out and reimbursed tax-free to them to pay for those expenses. The bottom half of this chart, again, this is just a quick snapshot for those that elected to, instead of paying a $100,000 premium, paid $10,000 for the next 10 years. This is a 10-pay solution. So for that 55-year-old that wants to be done by the time, let's say a 55-year-old male that wants to be done by the time he retires. So the 6-year plan with 3% inflation makes the most sense for him. His death benefit's $112,000, again, more than he paid in. And by the time he needs care at age 80, he's going to have $764,000 of long-term care benefits, or a monthly benefit of $98.54. Now, we've illustrated in almost every one of these examples, except this 75-year-old female, a 6-year plan. We offer benefit periods anywhere between 2 and 7 years. Our sweet spot really is the 6-year benefit period. For those older ages, sometimes a 4-year benefit plan makes more sense. But there's options, and Christy can help you design that plan. But again, 2 and 7 years, no elimination period, no paramed, no APS. We're going to do that phone interview, and we're going to make a decision. Typically, once we receive the results from that phone interview, we're going to typically render a decision within 5 to 7 business days. Since we rolled out our enhanced new business process here in July, we are seeing submit to issue in 10 to 12 days. And again, that includes the ones that are not funded by a 1035 exchange. For those of you that have done 1035s, we know those can take quite a bit longer. Maybe they take a couple weeks, 3 weeks, 4 weeks. It depends on that other insurance carrier. But for those that are funding it with cash, we're looking at 10 to 12 days submit to issue. That's our goal on where we're at right now. But this leverage chart will give you a quick snapshot of where we're at. Last piece I'm going to show you, Christy has a copy of this. If you're interested in Moneyguard, this resource guide has everything you want about Lincoln. A client guide, advisor approved pieces. If you want to do co-branding, email campaign on women and caregiving, Alzheimer's, here's all of our Moneyguard pieces, advisor client approved. Again, more emails that can be customized on your behalf. FlexPay co-branding, if you want to do a campaign that targets women in long-term care, we have pieces to that, or that addresses caregiving and Alzheimer's. Again, all of those are on this resource guide. And we also have client approved. If you'd like to do a client presentation, we have those here, and this is that link to the what care costs. So with that, I want to just open it up to any questions. I appreciate all of you being on today. Hopefully you've learned a little bit about Moneyguard, and that you will reach out to Christy, because she's awesome. She can help you talk through the options, run an illustration for you, and get you everything you need to place a case. Questions for me or for Christy?
It doesn't look like we have any questions, but as far as the underwriting process, Lincoln is the fastest when it comes to giving a decision. Their customer service in the back office, which matters to me, they're on top of it. So if we're looking for something, and obviously you want to bring your smokers to Lincoln. I mean, if they're not going to have the smokers, right? Am I correct, Rob? Yeah,
because the smokers and non-smokers get the same rate. And again, what you said, we have an application process, you have a phone interview, and there's going to be a decision. And we have enough claims experience, having done this for 30 years, to really know exactly which individuals are going to be good candidates. If you have an individual in mind that you think, hey, they could be a good candidate, but you're not sure about that health, you can share that information with Christy, and she can run that by a Lincoln Moneyguard underwriter. We don't want you to submit a case that's not likely to get approved. We also have within our new paperwork a knockout page that if you go through it and they're marking yes to one of the questions, they're just not a candidate. And we'd rather have you know, and you would rather know up front before getting a surprise decision after that phone call. So we're in a really strong position. Our market share has grown over the years. We've seen carriers come in and really try to copy what we've been doing. But I think it's important that you as the advisor is going with a carrier that has been doing this for years and years, has that experience, has a competitive plan that provides flexibility, and that also has no additional cost on the road with a deductible or elimination period. So
Right, and I think that's key there. No elimination period. There's no other hybrid out there that offers that, and that's very important to some people to be able to go on claim, I think. And I don't know if you mentioned, but over the 30 plus years that MoneyGuard has been around, Rob, what is the estimate in claims that they have paid?
Oh, I don't even, you caught me off. I don't even know what that number is. I mean, with 30 years, I mean, we placed 1.8 billion of MoneyGuard last year.
Wow.
So you can imagine over the 30 years, that was just last year, 1.8 billion in premiums. So we have a team in Greensboro that handles all the claims, and you're going to have one dedicated rep for that family when it comes to claim time. So that's a real strength of Lincoln when it comes to, you know, you could have a great product, but if the carrier's not there at claim time, certainly that can look poorly on you. You recommended this carrier. We're in a really good spot there.
Well, we don't have any questions, but Rob, I wanted to thank you for your time, and I hope everybody found it informative. I will send you out the webinar as well as the pieces that Rob has shown you, but please give me a call if you would like to see an illustration or if you have questions about a client you may be considering for a hybrid. My number is 800-365-8208, and my extension is 4082. And with that, I say goodbye, and thank you, Rob.
Thank you. Everyone have a great day.